Good evening. This is Ken Long from Tortoise Capital with a trade of the day case study for February 4th, 2013. I want to start off with a review of the daily health check from the previous night. And what we're looking at on a daily chart here in about 3 months was a market that is it's moving up. You can see the river is up. The floodplains are out of the lava here, the 200-day moving average. This is the regression line. The orange ribbon is the 2-period Bollinger Band, or normal price. And so what we have is the regression line, and all the price action of the last 10, 20, and 30 days has mostly been out of the river and in the floodplain, marching straight north, has cleared previous swing highs, and all these red lines are support levels that used to be resistance levels. And so we've got a really nice move going on. ADX is high up around 35. Bulls are in charge. It's in bull market conditions. But this long, uninterrupted, quiet climb up pulled back 2 days down to the edge of the river in the 10-period moving average. And then Friday closed with a strong move to break out to a new high. But this first little pullback was the first sign of the market showing weakness, or that this being one defined leg up. And you can see here, price performance oscillator had closed, so the jaws opened down here at the start of this move, had this nice long uninterrupted run while the market remained overbought, and then it dipped into no longer overbought on this 2-day pullback, and so that was enough to cause the jaws of PPO to close. So I really see this as a transition point. That's what we talked about this weekend. That continuation pattern to the long side would be good if it went above 151 or and a quarter, or then breaking out to a new high. But at failure here would bring it back at least to test the river. So we're looking at a market at transition. Is this the start of a second leg up, or is this going to start crumbling here and then revert back to the Bollinger Band mean and bring it back to around 147? That's what the trading debate will be this week. As a point of reference, we've come across some stuff forwarded from I think it's Trader Planet. Some guys looked at the ARMS index and 50-period smooth average, and so they found that when the ARMS index is at these low levels, that's often been a case where the market has had a correction, and so that just sort of reinforces what we already know to be true, and that is that the market is at an extended distance up above the Bollinger Band mean. It's out of the river and has shown just initial signs of getting weak. So we're ready to go in either direction based on price action, based on the yellow zone trading technique. So this morning what happened was we got the vertical blue lines are the market opening Monday morning. These are all 3-minute charts, so it just shows the close on Friday and then today's price action during the morning. My trading targets over here sorted by percent change so far, and we've got SPY here, and then TZA is the triple inverse Russell 2000, and then UVXY, which is the double VIX, and I've got these on here because the gap down in market weakness. See how it's riding the edge of the southern edge of the river. This is a market that wants to go down, and so I'm trading in line with the major trend of the day. I know it can go a good distance in either whether it's up or down, and so far it's voting down. And so I have my inverse targets on here for when the market is weak. I like to go long the inverse or play the volatility trade. And so what we have now are 2 regression line crossover system entries. The first one in TZA, we had a gap up, a pull back. Here's the 30-period regression line never even gets back into the river. The 10 starts high, crosses low, price comes down, never even touches the Bollinger Band mean, finds support. Starts resuming its move up as the market gets weaker. You can see it's going up as SPY is going down because of the inverse correlation. And so when it crosses back above the VWAP and then the 10-period regression line leaves the river as well, go ahead and buy this, and I'm going to put a stop down in here. My entry's at 11. My stop is at 1090, so it's a 10-cent stop. And this is regression line crossover, February 4th, 2013 in TZA. we get a nice move immediately up after this little spike up and a pullback. Find support at the edge of the river. The ribbon never even gets in the river. The 30 never comes back in either. So that looks to me like a good place to get to no lose. I want to make sure that I get paid, and then just start monitoring my trade as it goes up. So now it's up around 11.10 at this point. Now it's at 11.08. So we're at about 0.8 in hand, and this one will only be a positive trade. Meanwhile, a little bit later in the morning, so this was entered at about 10:09, at about 10:17 or 10:20ish or so, we've got basically the same kind of pattern in UVXY. You can see a lot of times the volatility will move sharply while the index itself is mucking along, and that's what happened here. So I like this one at 11:30. It's above the VWAP. It is just inched out of the river, so we get the entry at 11:30. I'm going to pick my stop here, so that's at 11. So that's a 30-cent initial stop. By the time price leaves the river, and now the 10 period leaves the river, and the 30 is still out of the river, that's the definition of beginning of trending behavior. And so that's a good time to get to no lose in the UVXY trade at 11:38. So we're about a third. We got about we're at about 1160, maybe 1155 here. So we're about 0.8 R also in hand. So move this one up to no lose plus a fractional win. So both of these are starting to move now. And if the market breaks down from here and it gets to 147, that'll correspond to a really nice move on the upside in TZA and in volatility, and it's looking like it has a chance to really break down. That's a good time to be postured with money in hand, no lose, and let's just see what happens. Okay, so a little bit later, when we get this is where that the price was when we looked, and now it keeps moving up. It's up around 11.18 now. So we're at about 1.8 R in hand up in here. And we've just been keep monitoring. Around this time, you might just use the Bollinger Band mean as your trailing stop and just adapt from there. But what happened in this one is I ended up taking the exit at 11.13, and on this one taking the exit at 11.80 because there was some price weakness occurring in here. There was that little spike up. This market was starting to roll over a couple minutes after I took the screenshot, and so I end up taking this exit here at 11:13 and took an exit at 11:20. You put those two together, and that comes out to let's see, 1.3 R on this trade, and this one is 50 cents on 30. That's 1.6. So we're talking about probably about 3 R, 1.3 and 1.6. Yeah, 2.9 R on the combination trade here on both of those. The next thing that happens is that around noon, now we're looking at TNA, and this is the triple leveraged Russell 2000 long. So the market had gotten weak down all the way down to noon, and what I noticed was that the right after 12 here, we had a big spike down in the Russell, but it was unaccompanied by that 2-period Bollinger Band. So that looks like a low volume exhaustion bar to the downside. That's exactly the kind of thing that if I was long the inverse, that would cause me to be ready to get out, because that's not unusual to see a turning point where you have a sudden exhaustion selling or exhaustion buying, and then no follow through in the Bollinger Band, and it starts reversing immediately. That's why I put this in the blue circle. That immediately causes me to start stalking it to go long. Here we have the regression line crossover, the 10 and the 30 cross outside the river after a long move, and the slope of the Bollinger Band is steep down. And so the ribbon keeps going, and then we get this entry here at about 75.90 when price re-enters the river. And now I'm going to use about a 20-cent stop, so if that's 75.90, 75.70 would put us a stop just below this little surge with a regression line crossover. Yeah, could you go down this far? Sure. But I wouldn't stick around that long if it went against me anyhow. So we buy this one at 75.90. It immediately takes off when we get in the money. It barely hesitates at the Bollinger Band mean inside this blue circle. Comes up, tests the top of the river, and starts pulling back. Would you be wrong if you cashed right there? No. That's 1.5 R to get out right there. What I notice is that the spike down here is not accompanied by the Bollinger Band ribbon, the BB2, and so I take that as very positive signs. The 30-period regression line is moving, so I stay with this one. Finger was on the trigger. When price now leaves the river, I've got 2R in hand and some momentum. It's cleared this little hump, and I'm thinking the next one possibility is 76.80. So I've got 2R in hand with momentum and the first signs of support already holding. I take the second entry at 76.40, again with the 20-cent stop. Shortly after, though, it rolls over, and we don't get the follow-through, and in this downward surge, I take the exit at 76.25, and that nets out to 1R. Could have had a better one? Sure, but I like the posture of having 2R in hand with momentum on two positions, and even if we just get to the VWAP up here around 76.70, that's going to pay off nicely on two. Doesn't happen, so we have to exit not later than the regression line crossing over, so you get some kind of fill in here, and you'll still be in the money on that particular one. What happens later in that trade? As you can see, after the regression line crossover, it comes down, tests the far side of the river, comes up, tests the Bollinger Band mean, can't break through, the ribbon doesn't accompany it, and starts rolling over. This is the beginning of downward trending behavior, because now you have price leaving the river, you have the 30-period and the 10-period regression line leaving the river, and then if it breaks below 75.80, if you wanted to wait that long, we would expect to see 75.60 and 75.40, and then it's Katie bar the door if it falls through there. So this was sort of just a standard regression line crossover with the checkpoints of what I'm looking for, when I want to add a second position, and then just a routine exit when the follow-through, which we had prepared for, didn't happen. And so don't stick around, get paid, cash an R, move on, be prepared for the next trade. And that's Ken Long from Tortoise Capital with the trade of the day sequence. There's a combination trade on the short side by going along the inverse, and then later in the day starting to play the reversion to the mean, and being prepared for a big follow through. Didn't get it, but we take what we can get. So all told, that was like 2.9R on the first combo and 1R right there. That's right around 4R for the morning's work, and getting paid to take care of business. So thanks for your kind attention, and we'll see you in the chat room. Keep your powder dry and your risk measured.